Hello traders, and welcome to another educational video titled The Inverted Hammer. The inverted hammer is located at the end of a decline, and it consists of a small real body of either color. So the color of the body might be black or white. The color of the body is not important in the inverted hammer. What is important is that it has a small, tiny, or even non-existent lower shadow, but what is important more than that is that the upper shadow is a long shadow, at least 2 to 3 times the size of the real body. Good. And of course, when it's located at the end of a decline, it has bullish implications. Very good. Let's take a look at the real chart and try to identify it. And I'm sure you can look at it, you can identify it right away. You can spot it on the chart. It's right here. It has a small black body in this case, a small lower shadow, and a long upper shadow, at least 2 to 3 times the size of the real body. Now it's time to take a look at a very simple, basic trading strategy using the inverted hammer. Before we do that, remember to subscribe below, like, and comment in a while. Very good. At the end of a decline, the inverted hammer, a small white body in this case, near a support area. This adds to our confidence. It makes us more confident to press the trigger and enter the market. It's another additional excuse to enter the market. The more tools support our idea, then the better it is. We're going to place a buy order right above the high price of the inverted hammer, and as always, we place a protective stop loss right below the low price of the inverted hammer. We place the protective stop loss just in case. You never know what is going to happen next, and the market might change direction anytime and go in the opposite direction. That's why we place the protective stop loss to protect our capital. Take profit strategy is at the 200% level. Again, this is a very basic strategy, and in the next one we'll add some more parameters, so it's going to be more realistic. Good. In the next strategy, once again, the inverted hammer at the end of the decline near a support area, we're going to place a buy order right above the high price of the inverted hammer, that is, and a protective stop loss right below the inverted hammer. First take profit strategy, now it's going to be at the Fibonacci extension of 261.8%. We're going to close part of our trade at the 261.8%, and then we're going to close another part of our trade at the 423.6%. If you wish to close the remaining of the trade at 423.6, this is fine. But then again, some other traders would like to leave a small part of the trade to run even higher and to take advantage of the rally. But in any case, when we encounter a reversal, any reversal in the opposite direction, then I'm sure you realize that we have to close the remaining of our position. Good. One more strategy. Once again, near a support area, the inverted hammer, small real body, white color this case, and then we're going to place our buy order right above the high price of the inverted hammer, and then a protective stop loss right below the low price of the inverted hammer. Then we're going to book some of our profits at the 200% level. Again, 200%, 300%, 261.8, or any other percentage. It's up to you to decide to follow any concept theory that you prefer. So I'm just giving you a lot of ideas here so you can construct, guys, your own trading strategies. Good. So first level to book profits is the 200% level. It's 1-to-1 risk to reward, right? The distance between the buy and the stop loss is the risk. And of course, the distance between the buy and the 200% is equal to the risk. This is the reward. So it's 1-to-1. And then we're going to close another part of our trade at the 300% level, and we will allow a small part of our trade to run even higher, take advantage of the rally, and when we encounter a reversal pattern, any reversal pattern in the opposite direction, then we're forced to exit this position altogether. And this is the case here. a shooting star, a reversal pattern right here at the top of the rally. A lot of traders ask me, why should I trust this reversal pattern? Why should I trust the inverted hammer? Since it closes near the bottom of the candlestick. Well, the logic behind that is that yes, it closes near the bottom, but it also opens near the bottom, and the value behind it is that it doesn't move much lower where it opened. And this is what makes it a reversal, or should I say, a potential reversal pattern. Good, guys, please remember to subscribe below, and I will see you in a while.